Hi everyone, Oleg Tkach here with your weekly rate update. This week, we really started the week with really no economic data. Basically everything that happened last week where we unexpectedly saw rates go up, kind of flowed into this week and the beginning of the week, but Wednesday, Thursday, Friday, there was some data that came out, some inflation reports from Europe that were more positive. In addition to that, the PCE inflation report, which is a report that the Fed favors, came out today, and it came out at 0.3 versus 0.4, so lower than expected. Now, the Fed is going to be meeting next week, which is a really big deal that this inflation report just came out right before the Fed meeting. In addition to this, there's more banking issues out there. First Republic Bank, there's a lot of rumors out there that they might not make it through the weekend. Why does that matter? The banking turmoil, even though it was bad news, it did help rates last time. The fact that now we're starting to hear of more banks, especially a big one like First Republic, just adds to the positive rate news and information coming out, which could continue, especially if the Fed comes out next week and says that they have done enough tightening, that they feel like inflation is starting to get under control. If that happens, we're going to see rates continuing to come down. That next Fed meeting is going to be pretty crucial. Most people are predicting that the Fed will hike by 0.25%, which is already priced into the market. Now, if the Fed changes its stance next week and says we need to tighten more, there's still, inflation is still a big problem, we think that we have to go more aggressive, we're definitely going to see rates turn in the negative direction. So there you have it. That is your update. Now, one thing I wanted to mention in addition to on this video is all the recent changes with the loan level pricing adjusters. There's been a lot of news that came out last week about, people with a higher credit score paying more in interest than people with a lower credit score. And I've had a ton of questions about this, so I wanted to kind of clarify a couple things. The first one is it true? The answer is yes, it is true. There were changes that have been made. Those changes went into effect a few weeks ago. It really took some time for it to really hit and you could say kind of go viral on social and the news agencies, but they have already been in effect. So is it true? Yes. The second part is, does somebody with a higher credit score, are they paying a higher rate than somebody with a lower score? And the answer to that is no. What happened was this. For example, let's just say rates are at 6.5% for your average buyer, not phenomenal credit, however, at the same time, too, not bad credit. Now, in the past, that person would have gotten a way better rate, around 6%. There was a major pricing improvement if you had great credit. On the flip side, let's just say somebody with bad credit in the low 600s and they're doing a conventional loan. What would it look like for them? Well, they would be paying close to a 7% rate. With the changes, the person with the great FICO now is around a 6.25 in our example, about 0.25% better than the average market rate. And the person with the worst credit score is now at 6.75, meaning that the spread between somebody with phenomenal credit or bad credit just got, it's not as wide. And so because of that, no, if you have a good credit score, you're still getting a little bit of a better rate. At the same time, too, if you have a bad credit score, you're not getting as bad of a rate as you used to. So overall, the data that's out there is a little bit misleading. Again, this has already been out for a few weeks. Recent clients have already been quoted. But I just want to kind of clarify that because a lot of people out there felt that it was a dramatic difference. And even though it's a difference, it's not as dramatic as as what was going on social and with these news agencies and everything else. So there you have it. That is your weekly rate update. We'll keep you updated. If there's anything at all that we can do for you or your clients, don't hesitate to reach out to us. We do have weekend coverage, 425-478-7676. Have a good one.